What's up guys, welcome back to another video. I hope you guys are all doing amazing. I hope you had a great week this week. I know this is my second time posting this week. It's a bit crazy. I'm starting to post twice a week as I said I would. So yeah, I'm super excited about that. I hope you guys are too. Very pumped that I'll be getting 2 stocks to you guys per week. Maybe even 4 depending on how many I do per video. But yeah, alright. In today's video I have a very exciting stock. I'm sure you've heard of it before. But I just want to do a full in-depth overview and analysis of this company because I think it is a very strong company and definitely something you want to keep on your watch list and maybe do some of your own due diligence on. I've been pretty interested in this company for the last couple months, and I did start investing in this company quite a while ago, probably 3.5 months ago at this point. And so yeah, it's a pretty interesting and innovative company, and it is, drumroll, NIO. NIO. Now this is an electric car company based out of China. They were founded in 2014, and this company is special for so many reasons. I'm going to dive into all of that in this video. So NIO designs, manufactures, and sells electric and partly and fully autonomous smart electric vehicles. They are working on their fully autonomous cars right now. Their last model did have an option, which is basically, it basically had a subscription where you could make it fully autonomous with a monthly subscription, which is kind of an interesting model, very different than what other car companies are doing, but has been working so far. So there's basically a partly autonomous and then fully autonomous version, and you can kind of choose whichever one you want. So first off, I think the business model of this company is so key to this company's success and growth, and why this stock is possibly a very good investment. So I'm going to go over that right now. I found an article written on this a couple days ago, so I'm just going to read this to you because I want to give you the exact facts and I don't want to twist it or put my opinion on it. I think just this article really covers why this battery model that NIO has is so key to the company, why it makes it completely different. By the way, make sure to like this video and subscribe to my channel. I noticed that about 85% of you that are watching these videos are not subscribed, so I'd really appreciate it if you did subscribe. I'll be posting twice a week from now on my top stocks, so you're not going to want to miss it. I'm going to have some great opportunities and some great stocks coming up on this channel. So make sure to drop a subscription and a like on this video. Comment below if you have any questions. I will definitely try to answer all of them. And yeah, alright, so let's dive into this article. So NIO's bet on boss, I think that's how you say it, hinges on several key factors. First, battery swaps are fast on average. It takes about 3 to 5 minutes for cars to receive a new fully charged battery compared to about 75 minutes for a full charge at a supercharger. So that alone is a major advantage. It's way quicker than going to like one of the supercharging stations that you'd normally go to. Also, at the moment, battery swaps are also slightly cheaper than other alternatives. NIO's current service offers 6 swaps a month, which in turn provides about 1,500 miles of range, which is quite a bit. At a monthly subscription price of $150, that's 10 cents a mile. So that's basically just below average for gas cars or even electric vehicles. It's not amazing, but it's definitely pretty good, and it's not going to be too expensive compared to other options. Boss also helps lower retail prices by enabling NIO to decouple the battery from the sale of the actual vehicle. So basically, it's a very different business model than selling the battery with the vehicle because it's a subscription service. So they're making a lot of revenue with this every single month. I'll go into that later in the article. I think they cover that. So NIO customers have the option of purchasing cars with or without the batteries, with the latter option retailing for roughly $10,000 less, making NIO cars more price competitive. That's also very important considering NIO is a luxury car company. So their cars are pretty expensive. They're also autonomous and electric, so they are, pretty expensive cars. So with this option, the cars can be a lot more affordable if you choose the subscription service. And this part I think is very interesting. Making NIO cars more price competitive, affordable, and eligible for Chinese government subsidies. So this company is based in China, as I said, and the Chinese government has been supporting this company and subsidizing it quite a bit, and this is a factor that we definitely have to consider when investing in any companies, especially if they're in the Chinese market, because as we've seen with other Chinese companies in the past, when the Chinese government is backing it so strongly and subsidizing it, they're not going to let it fail, and that is definitely a very strong factor and catalyst for this stock. Decoupling batteries also means that NIO can secure high demand for battery upgrades. Those enrolled in the battery swap service will want to upgrade when a better battery becomes available, and those not already in the program may enroll. So this basically allows for upselling for people when they come out with new batteries, for people to kind of subscribe to the new service, or for people just to upgrade when new things come out, which is pretty cool. Owners can also purchase new batteries on a case-by-case basis, which helps preserve most of the car's resale value and mitigates broader concerns of battery degradation. That is also very important. NIO's actions indicate that they see battery investments as a core part of their growth. The company currently has over 1,200 patents related to batteries and over 170 swap stations throughout China, with a goal of reaching 500 by the end of 2021. That alone is a massive catalyst for this stock. I mean, they're looking to do what, like over 2.5 times what they already have. That's absolutely insane. That's going to create so much more revenue growth in the future. Let's keep reading. Furthermore, at NIO Day earlier this past January, the company announced a new 150 kilowatt hour, 620 mile range battery to be offered starting in 2022. So I think 620 miles is more than the Tesla Model S. I may be wrong on that, but I'm pretty sure that is a decent amount more than Tesla, which is pretty incredible. Okay, so that's just kind of the overview of this key business model for NIO. Now let's take a little dive into the fundamentals, and then we'll do a little bit of technical analysis to wrap it up. So this company has a market cap of 56 billion, which does put it as a large cap company. Mid cap would be basically anything from 2 to 10 billion. So with the market cap of 56 billion, it is pretty big, makes it a pretty stable company. Although we do have some factors to consider that make this stock a bit more risky than other large cap companies. Has a quick ratio of about 2.3, and last year's revenue grew about 127%, which is absolutely incredible. Earnings per share grew about 54% last year, with a forecasted 58% growth for not only this year, but next year as well. So that's some incredible earnings per share growth. I absolutely love to see it in a stock that I'm investing in. Right now, they do have a negative 20% return on assets, which is fine. This company is not profitable yet. I think last year they had a net loss of about 150 million, and they are a relatively new company. This business model is still pretty young, especially in the electric vehicle niche. Although China is a very, very large market, since this company is so young and still growing at such a fast rate in its early stages, I think that that's totally fine. Especially with a growth stock like this stock would not really be considered a value stock. I think having a negative return on assets at this point and not being profitable is completely fine. It's very similar to what we've seen with Tesla, and Tesla stock has still done so incredibly amazing while it was not even profitable whatsoever. So there are currently over 90,000 NIO cars on the road. They have not expanded to the US yet or many other markets around the world. I think it's mainly just in China. But they do have over 90,000 cars on the road, as I said. Tesla has just over 1 million at this point. So although there's about 10 times less cars on the road than Tesla, the fundamentals and business model of NIO as a company, I think are so strong that those numbers are actually pretty impressive, considering everything we've already gone over and considering the fundamental setup that they do have, and also considering how large of a market China is. All right, let's take a dive into the technical setup of this company and do a little bit of technical analysis on the charts for NIO. Okay, so as you can see on the screen right now, I'm on the 3-hour chart. On TradingView. There's a website that I use a lot for all my technical analysis, among other websites, but this is the main one that I use. So as we can see, NIO is down about 45% from all-time highs about 2.5 months ago, right over here. So the upside potential right now is honestly quite amazing. There are a few things I want to point out and a few concerns that I do have, and I want you guys to consider a few factors here, because this is not a perfect setup. There definitely are some things that could go wrong. So as I said, it's down 45% from all-time highs about 2.5 months ago, and it was on a massive downswing the past about month and a half. It's been pretty brutal. So many EV and growth stocks have been just absolutely crushed the last month, almost 2 months at this point. So this stock did get up to like the low to even slightly high 60s, kind of mid 60 range, and it's been absolutely crushed, as I said. So it found in early March, it did find support around $34. That's where it kind of bottomed out. We saw a nice little bounce from there, a pretty amazing crossover in the MACD, as you can see here, and now it's kind of basically repeated that pattern again and finding support around a similar level. It's about $36 per share right now. So right now it's Sunday, so it closed last Friday about $36, just above support. All right, so taking a look at the 45-minute chart, we can see that right now the MACD does look pretty good. We saw this nice big green candle right here on Friday at the very, very end of the day. I love to see it. The RSI did increase a little bit, which is totally fine. As we see an increase in volume, we are going to see a little upswing in RSI, which is totally normal. Nothing to be worried about here. Something I am worried about is if this does have enough momentum to cross the support level we have at $34 right now, I'm definitely going to be cutting losses immediately, because this stock, we could see the stock tank so far down, possibly even to the high or even mid 20s if it does cross that $34 support level, since it is so strong. So be very, very wary when you're investing in this stock right now, because I don't think it will cross that. I think it's very unlikely, but if for some reason it does, that's going to be pretty detrimental to the stock. Now taking a look at the 15-minute chart, as you can see, I showed you this nice little upswing right here. I do love to see it. MACD is looking pretty nice. It is on the 15-minute chart, so it's not showing some massive turn in the overall stock, but at least in the very short term, this is something that you do want to see. So as I stated previously, I think the upside versus downside potential right now is amazing and definitely one that I want to take a bet on, because it is 45% down from all-time highs only about 2.5 months ago, and is sitting about support, which are basically its all-time lows for the short term. So I think that's definitely something that I would put my money into. And again, this is a long-term investment for me. As I went over the fundamentals and the business model and basically everything that's going for this stock, this is a long-term investment for me. I believe in this company in the long term. I'm not going off just the technicals, but I just want to point out these technicals since it is a pretty key technical setup, and definitely something to be aware of if it does go below that $34 support. So yeah, thank you for watching today's video. I know today's video was a bit longer than usual. I'm kind of experimenting with these longer videos where I do a larger analysis of a stock, kind of a longer analysis. I go into fundamentals, technicals, and my overall opinion and thesis on a stock, not just kind of a short recap. But yeah, let me know what you like better in the comments. I'd love to hear your opinions. Make sure to like this video, subscribe to my channel. I'm almost at 100 subscribers, so I'd really, really appreciate it if you subscribed. Thank you so much for watching, and I'll see you guys in the next one. Peace.